Hey everybody, it's Jeremy Whaley here from Trade Maestro, and I've got a lot of people that are asking me questions. They say, Jeremy, the market's going down. We're down 20, 25, 30%, depending on which index you're looking at. And they're saying, my retirement's disappearing right before my eyes. Gold is down, silver is down, commodities are down, bonds are down. Where is it safe? Where can I put my money? We're going to address that in this video. That's what we're going to talk about. Try to give you a plan moving forward. I've called it Rescue Your Retirement. Let's go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro. You can check us out over at trademaestro.com. And as I alluded to in the opening, we've got lots of people that are asking questions about what to do with their money. I mean, after all, the market is not doing what anybody wants it to do. The Dow Jones is down about 20%, depending on when you're watching this, around 20% for the year. S&P is down 25%. The NASDAQ's down 30%, and we don't see a whole lot of hope for anything different than that. Not only are the major equity markets down, but the commodities market, silver, gold, oil, we've got the bond market is down. Everything's going down, and strangely enough, the one thing that's going up is cash. So what do you do in this market? Where do you put your money? That's what we're going to talk about here. I've called this Rescue Your Retirement, and specifically this training is going to be for those of you if you're worried about your retirement accounts, your 401k, your IRAs, etc. If you're convinced your money managers are not doing the best they can do and you're wanting to get control of it and say, what can I do? Is there a way I can help myself? And if you're looking to get an edge and position yourself for some huge opportunities, then this is exactly what I have created this for. Again, I've called this Rescue Your Retirement. So here's the first step. I'm going to try to keep this pretty brief for you. Step number one, I want to remind you this is not specific financial trading advice. I'm just giving you some ideas that you can operate on. All right, step number one, go to cash. There's an old saying in Wall Street, when in doubt, go to cash. Why? Because, look, you can go broke holding cash, but you can't really go broke holding cash. Let me just kind of talk about this for a minute. Whenever we place a trade, whenever you say buy Apple or you buy Microsoft or you buy any other company, or even if you just buy an index or something, what you're doing is you're making the decision that you feel like that trade, Apple, or I keep saying Apple, but it could be any stock that you're buying, you feel like that stock is going to do better than cash. When the market's going down, the opposite's true. Cash is doing better. And that's really what the trade is. So instead of holding those equity positions, instead of just holding on for dear life and believing for the long term, just go to cash. Because when you're in doubt, you can go to cash. Even though you may not make a whole lot of profit on the cash, that cash is actually going to perform better in that particular moment. So during a time that's a bear market, the first most strategic move you can do is just go to cash, close all of your trades, maintain some sort of a cash balance in your account. That may look like a money market move. If you're in a 401k, it may be that you're going to a cash equivalent type of a fund. But the idea here is that we're going to go to cash. No, you're not going to earn anything, but you're also not going to lose anything. Therefore, cash is the safest position that you can be in. All right, so that's really the first most strategic move. And if there's only one move that we say, it's always when in doubt, go to cash. Now, I want to show you a couple of charts to kind of back this up a little bit. What you're looking at on the screen here is the Dow Jones Industrial Average. You can see how much it's gone down over the last several weeks, several months, actually 9 months. Let me just I want to clean a couple things up so that I do not overwhelm you here. All right, there you go. That is the Dow Jones Industrial Average. As I said, it's down about 20% for the year at this point. It fluctuates, obviously, day to day. The S&P is down around 25%. That's what it looks like. And the NASDAQ is down around 30%. That's what it looks like. But what a lot of people don't realize, a lot of people think in a bear market, well, I'll just go to treasuries. So treasuries, here's the ETF for treasury. It's called TLT. A lot of people don't realize this is what's happened to treasuries over the last year as well. On this ETF, the TLT ETF, we've gone from 154 to less than 95. We're sitting around 93, 94 right now. That is a 30% loss on treasuries. So no, Just because it's a bear market doesn't mean we need to go to treasuries. Then you say, well, what about gold and silver? So let's look at the gold fund. Here's your gold fund. Since March, gold peaked on this index, or on this ETF, it peaked up around 192, and it is currently trading at 152. No, gold is not a good idea right now. Why? Because it's going down. Okay, what about silver? Surely silver's doing great, right? Nope, sorry, this is the picture for silver. Since its peak back, let me make sure I get the actual peak here. Well, 2021 was the peak for silver. Since its peak around $27, $28 a share for the ETF, we are down to around $17. Again, it's almost a 30% loss in the fund. So just because you've heard over the years that you should go to gold, you should go to silver, you should go to treasuries, doesn't mean that's actually the best place to go. You say, well, where should I go? Well, here's the interesting thing. Look at this. This is the dollar index. Wow, look at that. The dollar is getting stronger and stronger. Now, I know, unless you've been living under a rock, you've been hearing about the crashing dollar. You've been hearing about how weak the dollar is getting. Actually, relative to all of the other asset classes, whether it be foreign currency, whether it be commodities, whether it be gold and silver, whether it be treasuries, the dollar is actually getting substantially stronger right now. And I know for those of you who are solid on gold, you're solid on silver, you're solid on asset-backed currencies and whatnot, kind of intuitively, the reaction is, well, it's fiat, I can't trust it. It's true, but in a fiat economy, until we have that glorious day when we're back on a gold standard, in a fiat economy, you're going to have to look at this as relative moves. That's the new game that we're playing. It's the game we've been playing for 50 years now. It's the relative move. And right now, the relative move says that the dollar is actually getting stronger than all of these other asset classes. So again, I come back to the original statement that I made, which is when in doubt, go to cash. That is actually the best place that you can be right now. If you want the simplest, most secure place to be, just go to cash. Okay, so what's step two if I want to rescue my retirement? Step two is you got to get control. I've been educating people for almost 15 years now in the space of the financial markets. And I tell you, it always blows my mind at how much people are willing to give control of their life savings away to somebody else. They go to their financial planner, they go to their money manager or whoever, they come to me and they're like, where should I do with my money? The answer is you got to get control of it yourself. Don't trust somebody else with your money. I promise you, you care about your money more than anybody else. So when we think about getting control, what do? The first step is to get your account under your control. Don't abdicate your financial responsibility over to a money manager. Money managers are doing a job. Usually they're doing a poor job. And if you look at the statistics, they're underperforming the market. Most people, because they don't trust themselves, they abdicate their responsibility. Then when the market goes down, they say, why did I lose all this money? Well, you didn't have control of it. You didn't know what you were doing. You didn't have control of it, okay? So the first thing to do is get your accounts under your control. Or if you can't do that, and I realize that there's some cases for retirement accounts where you can't get control because maybe your company or somebody has a 401k or something that's set up for you and they control it and they don't give you control. If that's the case, then you've got to find a way to hedge or to offset your risk. And we can do that with several tools. Option tools are one option. There's other tools that are available to offset the risk. And basically with an offset or with a hedge, what we do is anything that goes down in the main account that you don't have control of, you want to be able to offset that with something that will go up to offset the risk. And that's called a hedge. So if you can't directly get your assets under control, which is what most of you should be able to do, then the second move that you could do there would be to get an offset or a hedge for your account. All right, and then the next thing is you got to learn to trust yourself. You got to trust yourself. We've been indoctrinated over all these years that the professionals know better than you, that you don't have the ability to manage money. You don't have the ability to make trading decisions. It takes years of practice. It takes a degree in mathematics. You have to understand statistics. No. That is not true. You have the ability to make good financial decisions on your own. You've got to trust yourself. So for the second step of rescuing your retirement, number one, we're going to go to cash. Step two, we're going to get control. That looks like taking control of your money itself. If you can't take control, then we're going to get at least some sort of control. We're going to hedge it. We're going to offset it. And you're going to learn to trust yourself and know that you have the ability to make great financial decisions. So what's the third step? The third step is we're going to start using some tools such as exchange traded funds. ETFs are a great tool to get control of your retirement accounts. And in the case of a bear market, because we're dealing with a bear market right now, you're going to look at using inverse exchange traded funds or inverse ETFs. Now, what is an inverse ETF? Well, let's just kind of break this down briefly. An ETF is an exchange traded fund. It's like a mutual fund, but it trades on the exchange just like a stock. So it's really easy to get into, really easy to get out of. Most brokers don't even charge you a commission for it at this point. So way more efficient than mutual funds. It's like a mutual fund, but it trades on the exchange like a stock. All right. Then kind of there's my little personal opinion hint. It's way better than mutual funds. An inverse ETF is the same thing. It's an exchange traded fund, but it trades a short position. So as the market goes down, the inverse fund is going to go up. And that's why it's so beneficial. So the one that I recommend for a lot of people is SDS. This is the inverse of the S&P 500. And you can see here, I'll make this full screen. You can see as the S&P goes down, which is what's happening on the bottom here. That's the bottom of the chart. As the S&P is going down, SDS is going up. Okay, and you can use inverse ETFs for a lot of different things. Let me show you a couple of others. DXD, let me pull this one up for us here. DXD, this is for the Dow Jones Industrial Average. And you can see how much DXD has gone up this year. I'll rescale this a little bit. There you go. So DXD at the beginning of the year was at 39, and it's currently right around 50, but it peaked out around 59. So that's sizable move. A major one that a lot of my students are in right now is TTT. This is for treasuries. You can see what's happened with TTT since the beginning of the year. We were at less than 30, and we're currently at 100 on TTT. So this is what I'm talking about when I say hedge your positions, or when I say create an offset. You can use inverse ETFs that will go up when the market's going down, and that will offset anything that you can't get control of in your 401k. So it's a really valuable tool for doing those kind of things. All right. And then finally, so inverse ETFs. So if I were to recap this, we got to go to cash, get control, then use ETFs. And then I kind of have a bonus for you. And that is this: just never stop learning. The reason most people abdicate their financial responsibility is because they don't believe they have the education. They don't believe they know how. But the truth is, you know more than you think. And what you don't know, you can learn, and you can learn it very easily. In fact, I have an opportunity for you that I'd like to share with you right now. It's a new free training called Bear Market Survivor. This is for people exactly like you. If you got your 401k, you got your retirement accounts, you're just wanting to beat the market, Bear Market Survivor is for you. This is only a 3-day challenge. It's really brief. It's about an hour to an hour and a half per day. And what you're going to get from this, if I can try to make this bigger for you, day number 1, you're going to learn the truth about bear markets. You know, most people believe that bear markets are really bad, but they're not. Bear markets are not inherently bad. In fact, it could be the greatest opportunity of your life if you know what you're doing. So you're going to learn about that on day number 1. Day number 2, you're going to learn what to do with your money right now. I started sharing some of that right now in this Rescue Your Retirement video. Go to cash, get control, start using ETFs. I'm going to go a little bit more detail about what to do with your money right now, some specific ideas that you might be looking into. And then finally, on day number 3, we're not going to just learn how to survive the market, but we're going to learn how to thrive in a bear market. There's very specific strategies that you can use right now to actually increase your portfolio. Everything can go up. It doesn't have to be going down. Things can be going up in a bear market if you know what you're doing and if you learn how to manage that. So all you need to do is go over to TradeMaestro.com. I'm going to put the link below here in this video. Go over to TradeMaestro.com. Get yourself subscribed to not just the website, but to this challenge here. Register for it so that I can send you the links for the live streams. And if you can't make the live streams, then we can send you the link for the recordings, and you can learn exactly what to do during a bear market. Okay, so again, just go over to TradeMaestro.com. If you've not subscribed here on the YouTube channel, get yourself subscribed to this channel, obviously, so you get all the updates of everything that we're doing, and you'll get notifications of stuff like this right here, the Bear Market Survivor. And I've actually got another challenge on ETFs specifically coming up in about another week. But for now, we're focused on the Bear Market Survivor. So get yourself over there, get yourself subscribed to it, and signed up for it. And I will see you next time. Until then, happy trading to all of you. We'll talk to you soon.